Welcome to the Valareso Capital community, where we discuss the stock market and trading strategies to become a consistently profitable trader and investor. Hey guys, welcome back to Valareso Capital. On today's video, we're going to go through the market update and we're also going to take a look at the weekly watch list. I also want to mention some things about the market. I think that the action that we're seeing in the IWM is telling us a little bit about the underneath weakness that we are seeing right now in the market. I do think that we're seeing a lot of money flowing into the mega caps, and that's what is keeping the SPX at these elevated levels. So we're gonna take a look at those aspects, and then of course we're gonna take a look at the summation indexes, because we are already seeing a negative cross in those indexes. So I think that's very important for us to understand, because that really changes the tone in the market from a price action perspective. So remember guys that this video is based just on my personal opinion and is not financial advice. And also guys, if at any point of this video you find any information valuable, remember to subscribe to the channel. So let me jump here into the charts. The first chart that I want to take a look at is going to be the chart that we were talking about last week, and that of course is the SPX. We were talking about this pullback that we saw into that 21 exponential moving average. We were debating the idea and created the thesis that this was actually a buying opportunity going into last week. And here is your result, right? We can see how this actually was a buying opportunity on the SPX. We can see a really strong bounce that we had in the market. But now I'm starting to see a lot of divergences once again with the price and with my indicator right here. So I'm starting to see a little bit of a negative divergence. We can see right here basically that the SPX has been making higher highs, but my indicator has been making lower highs. So that's the first indication that we are actually starting to see as basically just a pause in the momentum in the market, which basically means that the leadership starts to get a little bit narrower, and therefore if you're actively trading, then you start to see how some positions are not getting traction, some positions are working, some positions are not working, and that's usually when we're starting to see a lot of chop. Usually what happens is that we start to if you're actively trading, you start to feel that chop in your own trading, and then of course then we start to see that chop in the indexes, as usually the stocks are the ones that are leading the move. So one very good chart to kind of assess that divergence is going to be the IWM. And the reason that I like taking a look at the IWM is because the IWM is a representation of some small caps and mid caps, and is basically an equal weighted ETF. So we have 2,000 stocks. For anyone who's not familiar with IWM, we have 2,000 stocks in this ETF, and usually we want to see the IWM also being in a bullish structure as the SPX. But when we start to see that the IWM is actually not in a bullish structure, that's usually the first red flag that we get in the market, as we might be changing the structure. So we can see right here, pretty easy, right? What is happening in the IWM? We had this pretty amazing rally, same as the rally that we had in the SPX. We had the pullback, but remember that the SPX paused at that 21 exponential moving average. But the IWM, you can see that we came a little bit deeper, basically tested this 30-day moving average, but we are continued to trade below this anchor VWAP from the high. That means that the average deep buyer, all the way from these days here, the average deep buyer is losing money. And what is telling you that from a psychological perspective? That is basically telling us that since all the deep buyers from that peak are losing money, they are more susceptible psychologically to dump their positions if they are not working. So that's a great sentiment indicator, right? The anchor VWAP is actually one of the greatest sentiment indicators that we have in the market. It's the average price from that point, a certain time and a certain level, and then we can see right here that people are losing money. And we can actually see that as soon as some of those people got their average price, basically their break-even price, they decided to close their positions, and that's why we had this huge rejection on Friday. So the anchor VWAP is a very, very useful tool, and it will help you to understand what is the psychology that we're seeing in the price action. So this rejection, I think, is a very strong rejection. We can see here that we closed once again below that 30-day moving average, and right now this is starting to look like a base that wants to break to the downside. The first stop, of course, is going to be this 50 daily moving average, and you can see right here that we had a breakout level. So it makes sense that if we happen to break to the downside, we're probably going to find a little bit of support here, and then perhaps move to the upside or perhaps move to the downside. That's something that we're going to talk about perhaps next week if we happen to see this move in the IWM. But the expectation here in the IWM is that we're going to see a break to the downside, and that the structure is actually changing. How do we assess if this is no longer valid? Then basically we will need for price to go above this anchor VWAP, close above that anchor VWAP, and then continue to the upside. But for now, the path of least resistance is going to be to the downside. So that's going to be it for the IWM. And then, of course, usually we're not going to see that in the SPX until some of the highest weighted names start to break to the downside as well. And those names, we're going to take a look at some of those names in a second. So that's going to be it for the SPX. Remember, guys, that we were also talking about the QQQ, and I was talking about the possibility of the SPX making a new 52-week high, which is what happened. And then the probability of and this is the QQQE. Let me just jump into the QQQs, the equal weighted. And we were talking about the possibility of the Qs not making a new 52-week high. And that's basically exactly what happened, right? You can see right here that we came, but we didn't exceed this high right here. Now the question becomes, are we going to move above it? And the answer is that I really don't know, right? I really don't know. The price action below the surface, as we were seeing in the IWM, is not that bullish. And basically what I'm seeing right here in the Qs is basically a change in the structure, right? You can see that we have a low here. This is a lower low, and we have a high. And for now, this is a lower high. So what is that telling me? That is telling me that for now, we have this kind of a structure. Are we going to see this? Are we going to see a test of that 50 and make a new lower low? Perhaps. I wouldn't think that that's a crazy idea, to be honest. So basically, just by looking at these prices, I do think that the assessment for next week is going to be that probably, most likely, the path of least resistance is to the downside. And let's just check the UVXY so that we can take a look at the pattern that is happening right now. So let me just see if I have other names besides this one. But let's jump here into the UVXY. So what is happening in the UVXY here? And I want to call to your attention something that happened last time. Last time, what we had, right, you can see right here that we had this base, we have this bear flag, we had a break to the downside. Then we had this huge push into that 21 exponential moving average. Then we had the rejection, and then we had another bear flag. We had this bear flag, we had this push to the downside, and now, after this bear flag, now we're starting to see something very similar to what we had right here. This is basically the same price action. You can see that we had this kind of doji, then we had this inverse hammer candle, we had this doji, then we had this inverse hammer candle, and now we're having a candle basically engulfing a little bit. We didn't engulf completely in this one, but this is starting to look like we are having a reverse price action, and then we're probably gonna see this kind of action right here in the UVXY. So the resistance in the UVXY is gonna be somewhere around these 860 to 9 area. Somewhere around here is going to be the resistance that we're probably going to see in the UVXY. But this price action here is starting to look very, very similar, and is suggesting that we're going to see a spike in the volatility, and that most likely is going to translate in a pullback in the market, led by the IWM. So it's going to be basically it for the indexes. And let me just show you a little bit about of the names that we were talking about these mega caps. So first of all, Apple, I think, is a very, very important stock. And what I think is that Apple is starting to look like a bear flag here. And the reason that I'm thinking that is because the momentum in Apple is negative, and we're also trading below the 21 exponential moving average. So my expectation is that Apple is coming here, right? We had a really nice bounce, but probably we're gonna get rejected. Is just what the price action is telling me here, or even if we happen to trade a little bit to the upside, this gap that we have right here is going to be a huge level of resistance, and also this 50 daily moving average. So Apple is not looking that bullish. We do have some names that are looking a little bit more, that are looking bullish, like Nvidia, right? NVDA. But remember that Nvidia, even though it's a mega cap, is not as highly weighted as Amazon or Microsoft or Google or Apple, right? So Nvidia, a very important stock, but not as highly weighted as the other names. Now the thing about NVDA here is that yes, this is an amazing breakout, huge breakout. And remember, guys, that we were talking about this chart last week. I was actually thinking that we were gonna stop somewhere around this 520 area, but of course Nvidia exceeded my expectations. We came all the way to that 550, but this price action here is also starting to look a little bit bearish. This candle right here, a lot of people say that perhaps when we close at that upper range, that means that buyers actually scoop the price. But I read a very amazing book about the price patterns of prices, but I will have to remember the exact name of the book. But is about the candlestick patterns, is the Japanese candlestick patterns. I think the name was Nelson, the author. I can't recall right now. But basically, a very important concept is that when we have a change in trend, we have these very big candles, right? Body candles. But as soon as we start to get these small candles, small body candles, that usually means that we're starting to reverse that trend. And that's exactly what happened here in Nvidia. And then you can see that we're starting to have these big body candles, big body candles. But as soon as that trend starts to lose momentum, we start to see small body candles. I'm not talking about the size of the wick, right? I'm not talking about the overall size of the price action. I'm talking about the body of the candles. I'm talking about the open and the close. And when we start to get these very small body candles, that is usually the first indication that we're probably starting to see a little bit of pause in that momentum of the move. So I wouldn't be surprised if Nvidia here wants to pull back a little bit. Of course, if we happen to pull back into the moving averages, that's going to be a bullish opportunity, right? That's just based on trend. But I wouldn't buy Nvidia. I wouldn't buy Nvidia right here, up here. I would just wait for a retracement before engaging to the long side. So that's going to be NVDA. Some names like Tesla are looking extremely bearish. So you can see that some names are looking bullish, some names are looking bearish, right? We had an attempt of a breakout in Netflix. It's pausing a little bit here. We can take a look at Bitcoin. And the thing about Bitcoin right now is that we're starting to see a little bit of a pause in the uptrend, and this isn't a surprise, right? I don't know if you have been watching the previous videos here in the channel, but we were talking about this momentum being a huge wall of resistance. And you can see right here that we were trying to move to the upside, but every move that we had to the upside was met actually with a lot of resistance in my momentum indicator, and then of course with the price. And now these candles are trying to hold this support at this 50 daily moving average, but I wouldn't be surprised if we happen to break this. If we happen to break this 50 daily moving average in Bitcoin, which happened to be a huge level of support, I think that will be the first indication that we're starting to see a change in the trend of these highly momentum stuff, and then perhaps that is an early indication of what is gonna eventually happen in the SPX. So that is what is happening with Bitcoin right now. And then if we jump into coin really quickly, we can see that coin, that which was a huge leader of the market, is starting to break to the downside here. We are already at the 50 daily moving average. We have to see if it holds, but if it doesn't hold, then perhaps we're gonna see a deeper pullback in coin and a deeper pullback in the market. That's gonna be my assessment. Now for the weekly watch list, I do think that probably we're probably the easiest thing to do is just focus on the short side. I'm gonna do it with the most bearish chart that I'm seeing, and that's gonna be the IWM, something really easy to trade. And it's really easy, right? It's really easy. You can start to build your exposure in IWM, and if IWM happens to close somewhere around this range here and above that anchor VWAP, then you're wrong, and then you can close your trade. Otherwise, I do think that the risk reward is pretty nice. That's gonna be it for the IWM. Then of course we actually take a look at Apple. Apple also looks like probably is gonna be rejected from these moving averages, but I prefer to stick with IWM, a really easy chart to manage risk and to trade. I want to keep it pretty simple. I'm not seeing a lot of opportunity right now in the market. I do think that we're going to break to the downside, and that's going to be the thesis that I'm building for next week. And also, if you happen to follow this guy Jim Croissant on X, he's actually talking about this pretty big expiration that we're seeing that is gonna happen on the 17th. That's gonna be Wednesday. And we are starting to see a structural change in the flows of the market, and that usually also has an effect, and that of course has an effect on the market. I don't pay as much attention to that. I usually just focus on the price action, but if you like to study some of those flows in the market based on options, we also have a very big expiration that happens on the big expiration, which is next week. So that might be something that that affects the market. I'm not really sure, but this is what I'm focusing on right now. And let me just jump here into the summation indexes. We were talking about this at the beginning of the video, and we were talking about how this was looking pretty bullish, right? We had this cross above the 10 EMA of the summation indexes, and now we don't have it, right? Now we're crossing to the downside, and that's usually a very big signal that the market is changing its structure, and then perhaps we're gonna see something a little bit deeper than a pullback. So just be prepared, guys. I do think that we have to be very cautious to the long side, but the market overall is also giving us a heads up, and I think is actually telling us like, hey, there is actually opportunity in trading this to the downside. So that's gonna be it for the video, guys. I hope that you have an amazing long weekend, and I will see you on future videos. Take care and bye bye.